Sir, can we start with the call? Sir, I think you have to unmute yourself.
Are you getting me?
Yeah, sir, now I can hear you.
Yeah.
Sure.
Please volume a little bit.
So can we start with the call?
Yes, sir. Yes, sir.
Yeah. Good evening, everyone. We have with us today Indian Bank's top management represented by MD and CEO, Shri S.L. Jain, and Executive Director, Shri Imran Siddiqui, and Shri Ashwini Kumar, and the other management. We would request MD sir to briefly touch upon the key highlights of the first quarter FY23 results and the outlook on growth, margins, and asset quality. Over to you, sir.
So, good afternoon. Welcome to the earning calls of Indian Banks for the Q1 FY23. As far as our business is concerned, our business has grown by 9% YOY. And our business deposit has grown by 8%. And the CASA has grown by 8%. It is on the strength of current deposit grown by 14% and saving by 7%. Advance has grown by 9% on the strength of RAM credit growth of 12%. RAM means retail, agri and MSME, which is 61% of our book. Under RAM, retail has grown by 14%, 1-4. Under retail, housing loan has grown by 11%. Auto loan has grown by 22%. Personal loan has grown by 32%. Jewel loan has grown by 42%. Likewise, in agri, we have grown by 13%. So crop loan has grown by 9%. Under crop loan, jewel loan is 53%. That has grown by 16%. SHG credit has grown by 35% under the investment credit. And MSME has grown by 8%. In the MSME, medium has grown by more than 25%. So that is business side. As far as our profitability is concerned, our operating profit has grown by 4% YOY, but sequentially it has grown by 30%. And net profit has grown by 3% YOY, but sequentially grown by 23%. The net profit has grown on the strength of NII growth, which is 13% on YOY and 7% on QOQ. In addition to NII growth, our non-interest, non-treasury income has grown 37% YOY and QOQ 17%. In the non-treasury, non-interest income, the fee income has grown by 35%. Recovery in bad debt has grown by 15%. Forex income by 133%. PSLC 17%. So all overheads, income streams have grown in double digit or even more. And the growth in expenses was moderate, and as a result, our OP has grown and our NP has grown. As far as asset quality is concerned, or gross and net NPA is coming down sequentially quarter after quarter. It is at 8.13%, is again 8.47. Likewise, NNPA has also come down from 2.27 of last quarter to 2.12%, and the PCR provision coverage ratio has improved from 87.38 to 88. As far as our collection efficiency is concerned, it is 94%, is against 95, and our SMA 1 and SMA 2 has come down from 0.98 to around 0.61%. So, and the capital position is 16.51%. If we add the profit of the current quarter, it is 40 bips more, 16.91%. The slippage in the quarter was around 2,885, and around 50% of the slippage is from the restructured book. Under the corporate, major slippage is in the retail future group and one sugar account, one government account which the money is received in July. So this is as far as our RWAs are concerned, our A and above rated account has increased, and you see our RWA has decreased from 65% of credit a year back to around 60%. Our cost of deposit has declined by 3 bips to 3.85. Yield on advances have grown by 16 bips, and as a result, our NIM has grown to 3.10%. Cost income ratio has also come down substantially to 41.94%, and ROE is 14.18%, and ROE is 0.73%. So all the ratios are showing improving trend. This is the sum and substance of the current quarter, and the real growth was by 4% and 3% on YOY because of the treasury contribution. It was last time 605 crore, as against this it is 105 crore. And likewise, the MTM provision was 56 crore. Last year it was 236 crore. That gap has been filled by core operations by increase in NII and other income. Now I am open for question. Along with me, our ED Imranji and our ED Ashwini Kumarji and corporate GMs and CFO is here.
Thanks for the brief highlight. Sir, first in basically wanted to check the outlook on the growth, which has been slightly lower than what we have seen versus the peers. And secondly is the outlook on margins and asset quality, and then I think we can take questions from the participants.
So credit growth, we are growing 9%. But in corporate side, we are negative by 2%. But if you the corporate, every quarter we are adding 2,000 to 3,000 crores. Every quarter from September to December, December to March, March to June. Considering all this, our growth for the year as a whole should be around 10%, plus minus 2% can happen. And our growth will mainly in the RAM sector and this. And our growth was low because in the first quarter there was a interest rate dislocations, and we are interested in a good return on our advances. So because of the rate issues, we have grown in this sector more.
So good to hear, sir, your focus on profitability rather than growth.
This is reflecting in our ROA and ROE.
Certainly, sir. So secondly, your outlook on asset quality.
Our gross and net NPA is continuously declining. And considering our SMA position as on 30th June, collection efficiencies, by the end of the year, we expect that our gross NPA should be around 7% and the net NPA should be below 2%.
Yeah, sure, sir. We can start taking the questions now. Yeah, Mr. Ajmera, you have the first question. Please go ahead.
Yeah, good evening, sir. And real good compliments to you, sir, for giving such a fantastic result for the bank, and especially on the treasury operations where every bank is facing a severe problem and they are going in negative. We are still plus in the treasury, though it has come down. So, sir, my first question, sir, or observation or question, you may call it anything, from your side, some comment. Going forward, where do we stand on our investment book or treasury front? Like both if you take the trading profit and also the M2M on the AFS and HTM, and in the remaining 3 quarters of the year, how much impact it can have, the rate hike, which may be 25 basis to 50 basis points, and what is your guess about it? So my first question is around the investment and treasury.
Yeah, as far as our treasury book is concerned, we are around 1,85,000 crore, and of which AFS is around 53,000 crore, and the modified duration of AFS is 1.91. Now we have the valuation on 30th June 7.45. Today it is 7.30. So virtually On the current rate, there is a right back. And going forward, we expect that the bond yield should be in the range of 7.25 to 7.75. So as and when the yield is going beyond 7.5, we are making investment. As it is coming down from 7.30, then we will be selling. This is our position. So based on the market, we will be taking a call. But going forward, if the interest rates remain between this, then there will be a right back.
Sir, our non-SLR book is 38,000, over 38,000 crore. Any provision or any pressure there on the non-SLR? We are fully covered for any kind of losses, mark to market or anything on non-SLR?
In a non-SLR, you see, as a security receipts of around 3,100 fully provided.
Yeah. Okay.
And rest 18,000 is for the recapitalization bond and all. So there is nothing more here as per provision is concerned.
Sir, coming on the restructured book, sir, now with the COVID restructuring and other thing, now the payments have already started, now the installments and the interest payment from all these accounts. So what is our experience on this? And then SMA 1 and 2, I mean, going some of that because you are the standard asset restructured. So where do we stand on the recovery efficiency on the restructured book, especially those restructuring which were done as a special dispensation under COVID, sir? And what is the total amount of restructured?
Yeah. Actually, we have done the restructuring of 22,000 crore. As on date, the standard restructured book is in our books is around 16,580, which is around 4% of our book, right? And as far as retail is concerned, it is absolutely doing good. Retail and agriculture and corporate, actually 2 or 3 big accounts have slipped, and therefore there is a slippage in that. But the remaining, I think we are more or less safe. Only the stress is in the MSME sector. That is appearing in our SMA 1 and 2. So how this MSME book will be behaving, we are monitoring this MSME book.
What is the total size of SMA 1 and 2, even below 5 crore also?
Our SMA 1 and 2 in the restructure, I will tell you the restructure. The collection efficiency in our restructuring book is around 88%, right? And SMA 1 and 2 is in retail, it is only a 0.13%, agriculture 0.41%. The issue is 2.78% in the MSME. But you see in MSME, what we have done, we have given the GECL, we have given the COVID restructuring. So what happens in this process now, the economy itself is improving. So slowly they will come out. So we expect that there will not be major slippage on this account, and all other portfolios are well behaving.
Sir, my last question in this round of questioning is on the employee cost, which has come down as compared to many of the other banks. Here it has come down in this quarter by almost about 400 crore. So is it a one-time, is it going forward? We are going to have the book of, employee cost every quarter of only 1,540 crore.
Now, point is that 400 crore last time we have provided one-time this pension provision. That was a one-time item. Otherwise, my cost is around 1,200 crore per quarter. So with 4,800 crore and 350 crore or so is AS15. So 1,400. So that around 6,300 to 6,500 should be the cost.
Okay, sir. If the moderator permits, just last one question, sir. On this credit growth only, which you had answered partially, where do you see the growth coming from, and what is your idea of increasing now when the things are looking little better, as you yourself said, to increase correspondingly or comparatively the corporate book little faster than what you are basically guiding or targeting, sir? Can we not look at little more a bank of your size, which has already crossed I think more than 10 lakh crore rupees of a business? Can we look at little higher, and from where do you see this credit coming in? What are the sanction pipeline?
So you see the RAM side, absolutely no issue. Corporate credit you see from October to October to December, December to March, March to June, every quarter we are growing 2,000 to 3,000 crores. We are having around 19,000 crore of term loan sanctions in hand, 14,000 of working capital utilization, and last quarter too we have sanctioned around 19,000-20,000 crores. And the proposals are coming from the road projects, proposals are coming from the city gas distribution, proposals are coming from the cement, proposals are from textile, proposals are from the NBFCs, proposals are from the power sector. So these are the major sectors where we are getting the proposals. But the issue is that you should get a better pricing and margins. So we are basically margin conscious. And if we are getting a good return on the transaction, will definitely increase. So therefore, considering all this thing in view, I have given a conservative side a guidance of a 10% rate growth.
Well taken, sir. Thank you very much for giving this opportunity. I'll come back if the moderator permits me again for the second time. Thank you.
Thank you. Thank you, sir.
We have next question from Jai Mundra. Jai, please go ahead.
Yeah, hi, sir. Good evening, and thanks for the opportunity. Sir, you have given decent disclosure on restructuring loans. I just wanted to check how much of the restructuring standard accounts out of 16,600 crores, how much of those are already out of moratorium and have started billing?
My point is the 16,000 moratorium is no more there. Moratorium was in the last year. Some moratorium in the COVID part of the restructuring, but to my mind, major part of the book is the billing has started in major part of the restructuring book.
Okay. And secondly, sir, on your yield on advances, right? So it has increased in a sizable manner, QOQ. So I just wanted to check, is there any one-off, or you have, you have managed to pass on the yield transmission or rate transmission, or how should one look at it?
So my EBLR link advance is around 42% first. And RBI has increased the repo rate 40 bips and then the 50 bips. 40 bips in May, which we have passed in June. Even the June also partially we passed. And third one, MCLR also we increased in the month of June. So putting all these three effects, and second, we are more aggressive in the retail side where margins are there. So considering all these things, there is an improvement in margin.
Right. So
in the corporate and corporate, you say corporate is very competitive, very, very competitive pricing.
Right. So in your case, sir, if EBLR, let us say RBI hike the repo rate on 3rd, 4th May, the EBLR linked loan will reprice almost immediately, or there is a reset period, maybe 1 month, 2 month, 3 month. How does the contracted rate, the new rate, when does the new rate reflect? Would that reflect within 2-3 days, or this could take some 1 month, 2 months?
No, we will pass on immediately in EBLR in 1 or 2 days time. But wherever we have given, somewhere in some transaction it is given in the next month. Otherwise, majority of the transaction we are clearly writing that it will pass on immediately.
Okay, understood. And last 2 questions, sir. First is on your tax rate, right? So last few quarters we were having negative tax rate as we had accumulated losses. This quarter there is some positive tax rate. So how should one look at it, and what should be the full year tax rate one should assume?
Yeah, you see, because of the Amal commissions, we were getting the benefit of carry forward losses of erstwhile Allahabad Bank. Now, in the last call, I told you that in the current financial year, the tax credit will be available partially. So, whatever the tax credit available considering this and based on the accounting standard for a year as a whole, we have worked out the tax liability. It will be around 10% of the PBT in this financial year.
Understood. And last question is, sir, if you have the ECLGS number, total sanctioned, total disbursed, outstanding, and GNPA in that book, that would be very useful, sir.
ECLGS is around 8,000 crores. And in the NPAs last quarter, ECLGS is around 112 crore or so. But we have provided fully. And total NPA on ECL just book is around 400 cumulative.
Sorry, so out of 8,000 crore outstanding, around 400 crore is the NPA, roughly 5%, right?
Right.
Great. Thank you, sir. I'll come back in the queue. Thanks.
Thank you.
Yeah.
But we have provided fully.
Sure. So one more question which has come in the chat box again relates to your lower tax rate that we have seen during the current quarter. So the question is basically how much carry forward losses that do we have under the Income Tax Act? I think on the balance sheet we don't have much losses, but yeah, Income Tax Act we will have.
So while calculating tax provision for a year as a whole, what will be the possible income of the bank for the year as a whole, and what will be the carry forward loss? Calculating everything in mind and based on the accounting standard 25, we have calculated the tax liabilities, and accordingly it works out to be 10%.
Okay. But sir, anybody would know basically the CFO that basically what's accumulated carry forward losses that we have?
So that we will let you know.
Sure, sir. Yeah. Next question. Yeah, Mr. Ajmera, you can unmute yourself and ask a question.
Sir, by the second round, may I ask you what is the advances total breakup in terms of the interest rate, the fixed rate, MCLR, EBLR, so that we can get some idea what is the breakup of the total credit, total advances of the bank book? What is the
total correct? Around 40 to 43% is a EBLR, around 45% is MCLR, remaining on fixed rate or a staff advances or overseas advances.
And while the EBLR comes into effect immediately, the MCLR takes some time. So what is the time lag to in case we see in the 2-3 days the increase in the rate?
So MCLR calculation formula is depend on your cost of deposit, right? So slowly the deposit rates are increasing, and based on the increase in the deposit cost and the formula, MCLR works out. So what happened? We were at a 7.30%, and we have increased from 1st June 7.4, 1st July 7.55. So 10 plus 15, 25 bips we have passed on. Now we'll take a call for today for the next MCLR, because it is decided on a monthly basis.
Means the lag period may be 1 month to 40 days, depends on what date is announced. And
actually not 1 month, it is depends on your deposit cost. Suppose my 1 year deposit was earlier 5.10. Now it has increased to say 5.30. So as and when I will increase that deposit rate. So we are not increasing deposit rate from 5.1 to 6%. So based on the available liquidity in the market, based on the competition in the markets, we are taking a call on the deposit rates.
We can say that we can assume that almost 50% of the book is with immediate effect, and 50% may have some lag. Entire credit. So
MCLR link what happens. Somewhere it is a 1 year MCLR, somewhere it is a 3 months MCLR, somewhere it is a 6 month. So it will come for repricing over that period.
And sir, on this recovery front, sir, recovery from the return of accounts and various other recovery like asset recovery and construction company, which is getting delayed quarter after quarter. But I think it should materialize in this quarter. So what is that book size? How much loan is going to go in the first tranche of that 50,000 crore if it is not revised? And how much gross NPA, so that we can have the idea of gross NPA coming down. And secondly, is there any other ways which you are trying to sell these, your loan book to other asset recovery companies, if not NARCL, or any kind of, sales by reduce, because that gross book, so it comes down. Gross book can come down only by these means only. And what are the recovery targets from the return of accounts in the remaining quarter of the year?
So I'll confirm. What happened initially? 8 accounts were identified in a phase 1. Out of the 8 accounts, 3 accounts we have already resolved. So remaining is a 5 account, around 1,200 crore. Again in the second phase, around 8 or 9 account of 1,300. So 2,500 crore. Out of 2,500, first we are having 100% provision. Second, out of 2,500, maybe around 2,200 crore is already fully provided and written off. So whatever money we will be receiving will be a gain. And your third question of yours is about the recovery number. So you see in FY21 we recovered around 5,500. FY22 we recovered 7,200. In FY23 we internally decided to recover 8,000 crore, means 2,000 per quarter. We recovered 2,000 crore plus in the first quarter. So likewise, second, third and fourth quarter will again recover 6,000.
We can have the similar kind of recovery scenario.
Yeah, we will have similar.
Sir, those two, three accounts which were there like Shire and this thing, they are all now fully future and they're all fully provided for now, 100%. You had any? How much was the exposure? This exposure on Shire?
Shire 1,800 crore fully provided.
Because it's a fraud declared account.
It is fully provided. Even we have provided last year.
So there is no more.
The sugar account also we have fully provided. SR also we have fully provided. Pension also we have fully provided.
So pension in this special family pension, this thing, it is I think very forward for now for a few years.
No, it is fully provided. It is fully provided last year itself.
So that's great, sir. I think that impact will not come in the future profitability now.
So everything has been provided here.
So now the only concern is that the free float is very less, sir, in our stock actually because of the government holding. Is there any plan of the holding to bring it down so as to make it a little more free stock available in the market in the coming?
My capital adequacy ratio is 16.51, is against 11.5, and the profit, if I add a profit of this quarter, it is 16.91. So we are much above the minimum regulatory requirements. So capital wise, we are comfortable. But in any way, we are having an enabling provision from our shareholders and the board about raising of a capital. So we'll take a call during the whole year, depends on the requirement of the funds and the market conditions.
Okay, sir. Thank you very much. Really, you are doing very well. I mean, we have been seeing the results of some of the other banks, but you have performed exceedingly well. And I wish you all the best for the remaining part of the year or remaining of your tenure. Thank you very much.
Thank you, Ajbaraji. Thank you.
Yeah, thank you. Sir, we have one question in the chat box, particularly again on your deposits. And that's basically that what are the challenges that we are facing in deposit accretion? I think our deposits declined quarter on quarter. So what was the reason for that? And what are the basically strategies to mobilize deposits going forward, where basically we are seeing a lot of competition from the peers as well?
So, of course, that deposit has declined from March to June, but that is major fall is in the government deposit. What happens in a government deposit, last quarter money comes and the first quarter so part is been expanded. So automatically your deposit will come down. But what as an organization, what we have done? So in December, we came out with a tablet banking. So through tablet, we can go to any institution and open an account. In the last quarter, in June, we have opened around 8 lakh account, is against 2 lakh account of the last year. And 40% of these accounts are being opened through tablets. Now we have done even the current account also we are starting opening through the tablets. So what will happen then we can go to any institutions and open the account of any organization and go to the account. So and in addition to that, we are having number of schemes for mobilization of saving deposits and the current deposit. We are focusing on the educational institutions, college. We are focusing on number of things for increasing our deposit. But as far as our domestic saving deposit and CASA is concerned, for domestic deposit is maintaining around 42% or so, near to 42%. And even in the government accounts also, we have opened the SNA account. Last quarter, we opened 55 more accounts. So 155 accounts we are having. 1,200 accounts we opened for college, institutions and all for getting continuous deposit. So we are focusing on that.
Okay. So that itself will drive you basically the deposits, or you need to raise the deposit rates as well?
No, deposit rates are decided based on the market conditions as well, liquidity and the market conditions. Because we should be relevant in the market, but we don't want to be a price leader in the market for deposit.
Sure, sir. Sorry, we have next question coming from Sonal. Sonal, please unmute yourself and ask a question.
Thank you, sir, for this opportunity. I have a couple of questions. Firstly, sir, what was your SMA 1 and 2 above 5 crores in the corresponding quarter last year? So I'm referring to June 2021 quarter.
Okay, that I'll tell you. As per June 21, just I'll tell you. In addition to that, you can ask.
Sir, what is the overlap between your standard restructured book and SMA 1 and 2 above 5 crores?
So what I told you, over 16,580 crore of a restructuring book we are having. Out of this, 7,400 crore is in retail. Here the collection efficiency is 90 plus, and if you see even the slippage from this book was around 187 crores last quarter. And likewise in agriculture also, 1,000 crore of a restructuring book we are having, and here the collection efficiency is 86%. Over MSME restructuring we are monitoring virtually. Basically, this is the area where some kind of a stress is there because of economy. Or I think first we have supported them. Now the MSME which were capable has come out from even from the SMA 1 and 2 as well.
Sir, my apologies. My question was a bit different. What I was trying to get was, what is the common number between your SMA 1 and SMA 2 above 5 crores and your standard restructured, so that we don't double count the number? That was the purpose why I was asking this.
So SMA 1 and SMA 2 includes restructuring SMA 1 and 2. So there is no double counting as such. So this is the total SMA 1 and SMA 2 we are having.
And you have a standard restructured book. So what is the common number between the two is what I'm trying to understand.
Common number between?
Standard restructured book and SMA 1 and SMA 2.
Sir, I'm just repeating whatever SMA 1 and 2 we have disclosed includes restructuring.
Yes, that's why I'm saying there's a double counting. So if we add the restructured book in SMA 1, SMA 2, it will lead to double counting. So I'm trying to understand.
Okay. Okay. So out of this 0.6361 SMA 1 and 2, how much is on account of restructuring?
SMA 1 and 2 is 1,896 is SMA 1 and 1,552 is SMA 2. Out of restructuring.
Thank you, sir. And if you could give us a SMA 1, SMA 2 above 5 crore number for the last year in the same quarter.
That will provide you.
Sir, how is the underlying total SMA 1, SMA 2 movement? Is it on the same lines as of SMA 1, SMA 2 above 5 crores?
It is on the same line. You see the collection efficiency is on the same line, sir. So automatically it is on the same line.
Understood. Thank you very much.
Thank you, Sonal. We have next question from Sushil Choksi. Sir, please go ahead.
Congratulations to Indian Bank management for a great result. So my first question is, our dominance is in southern states where service economy and manufacturing both are doing well. So in view of that, what is the best optimistic CD ratio I can see in the bank?
Presently, our CD ratio is around the 73%, right? So naturally, we would like to maintain the ratio at this level. Last quarter it was 70%. So it should be around in 73 level.
You don't think with so much of PLI scheme and so many manufacturing businesses coming specifically on auto ancillary, solar and other things in southern states and just around your headquarters, your dominance with the presence with southern companies, CD ratio can exceed 75-76?
The point is that you see our deposit in the first quarter has come down. So we are focusing on the deposit more in the second quarter and try to maintain 73% of the CD ratios. Or even 74 also it can happen.
Sir, with southern economy is more a saving oriented economy, what is different that our CASA ratio is not improving?
The CASA we are growing at 8%, 9%, the way our deposit is growing. So, and you see from the last 2-3 years when the amalgamation started, we are slowly we are increasing it. This year we are focusing on increasing CASA ratio, and therefore this tablet banking and all, we are going to the customers for opening account. We are focusing on that.
Sir, but the integration bank and your current bank, both are homegrown for you. So how does the synergy and benefit work for you better?
Yeah, it is working better, sir. That is reflecting in the growth in NII, sir. That is reflecting in improvement in ROA. It is reflecting in growth in ROE. It is reflecting in growth in cost income ratios. In all places, it is reflecting, sir.
So what's your outlook on international business, digital expenditure for future growth strategy, digitization, and how do you see retail business growing in your bank over a period of 2-3 years? And outlook on gold loan.
Good question, sir. You are asked about the digitizations. Lot of work is going on the digitization. In the last month, we came out with the pre-approved personal loans. We have already launched. We have already launched KCC renewal on digital. Shortly, we are launching that gold loan, home loan, top up, MSMEs, Mudra loans. 4-5 journeys we will be launching in between today and our foundation day. That is on 15th August. And after that also every quarter we are working on that 6 or 7 new journeys we will be launching. So that is one part of our digital side. And the other part is you see our mobile banking has increased 75% in one quarter. So we are focusing on our mobile banking, and as a result, our digital transactions have improved substantially. In HR side also, we have done number of changes, performance management system, new system is brought in and implemented in the bank. And in the IT infrastructure side, we have done number of things. We are having 1,000 digital banking champions, right? And we are having this middleware through which we are started doing API integrations, omni channels we are doing. So that number of things are going on in the digital side in the bank. So the result of which will be seen maybe after 6 months to 1 year, 6 months up for each and every segment.
So your gold loan outlook?
Sir, gold loan we are growing 16%, 17% in the agri side and even 42% in the personal loan side. What we have done around 421 retail Shopee we have created in the last quarters. These branches are doing gold loan only. So because there are huge opportunities there in southern part, so we are focusing on that. Focusing not only in Tamil Nadu, even Kerala also.
So if your growth is approximately at a CD ratio of 73 maintained or 74, how much do you see growth coming out of retail and how much out of corporate banking?
So point is that we would like to maintain our RAM 61 plus minus 2% here. And in corporate also, but we are margin conscious. So if we are getting good return, we will grow.
Sir, and what's your outlook on credit cost on an optimistic side?
The credit cost of a bank is around 2.02%, right? And here, because of the 100% provision we have made for sugar account or even future accounts and all. Going forward, what we see, because the SMA 1 and 2 has come down, so slippage will become. So our credit cost for a year as a whole should be lower than 2%.
So that is you are guiding very conservative when you have provided 100% on all the NPAs. Are you estimating that your losses are going to accrue from some other SME assets which you are foregoing, or it is you want to remain conservative and outperform the market?
You are 100% correct, sir. We should be conservative while giving guidance.
Sir, thank you.
We should be able to deliver. We should be able to deliver better than that.
So thank you and all the best to the entire team and management of Indian Bank.
Thank you, sir. Thank you.
Yeah, thank you. Next question we have from Dikshit Doshi. Dikshit, please unmute yourself.
Yeah, thanks for the opportunity. Actually, most of my questions have been answered. Just one last question on any outlook on the NIM. We have improved very nicely to 3.1% this quarter. So how do you see it going forward?
You see, our book is 42% is in EBLR, right? So, and in an increasing interest rate, what will happen? Your asset will be repriced first, and the liability follows. And the liability, then the deposit rates is also increasing in the market, right? In a 1 year deposit, 2 year, 3 year deposit. So considering this in view, we are of the view that we should be able to maintain our margin of 2.91 of the last year. We can be better than this, but we should be able to protect that margin.
Yeah, thanks.
Yeah, thanks, Dikshit. Next question we have from Manish. Manish, please unmute yourself and ask it.
Yeah, hi. Thanks for the opportunity. So my question is around your MSME loan. So if I look at your MSME book, almost 25% of your book is stressed. So can you give some qualitative comments on, is there any specific MSME cluster where you are witnessing this kind of a pressure? That's one. What is your average yield on MSME? That's the second part. And third is, what's the ground level feedback on your MSME customer right now? Are they facing any major issues in terms of margins? Is their cash flows coming back to the pre-COVID level? So some color on MSME side, that would be useful. Thank you.
So I request Imran ji, who is in charge of MSME, to kindly answer.
Sir, our MSME borrowers generally after COVID, most affected people were the MSME. But after this improvement in economic conditions, the MSME borrower slowly coming out of stress. Even our SMA book in SMA 1 and SMA 2 has come down in MSME from previous quarter. And regarding none of the specific sector, mainly these hospitality and all were under more stress, but across the board, the MSME book was under stress. But now what we are doing now, we are running a campaign to improve our MSME book in 5 crore and above, because there we get better margins, and there the quality of asset is also very good. In our recent campaign, we have mobilized around 7,500 crore proposal, and out of that 2,000 crore has already been sanctioned and 500 crore is already been disbursed. And the kind of yield we are getting in MSME is it's around 8.5%. So going forward, we will be having a better asset quality in MSME.
So if I heard you correct, you mentioned 8.5% yield on MSME portfolio, correct?
Yeah, roughly 8.5.
And out of your MSME restructured book, is the moratorium over, or are there still customer under moratorium?
Majority is over.
Majority of the account is over.
Yeah.
And in addition to that, in MSME, we are also focusing on cluster-based financing, where the NPAs are less. So we are having number of clusters.
Roughly 37 clusters we are already having.
And their NPAs are comparatively low. So we are focusing on that.
And do you expect the kind of mortality we have seen in MSME in this quarter to continue in next couple of quarters, or you think those are largely over?
The way the MSME is behaving and the way the economy is improving, right? So, and these MSMEs have survived, sir, in the last 1 year, 2 years, 3 years. So we hope that going forward, the slippage should come down from the MSME.
Sure. Thanks for the answer. Thank you, sir. And all the best.
Yeah.
Yeah, thank you, Manish. Jay, you have a next question. Please unmute yourself and ask a question.
Yeah, hi sir. If you can specify the sector of the government loan account which slipped during the quarter and it has already been upgraded, and the quantum.
There's one trading account around 200 odd crores, which we have provided 100%, and the money has received in July, so it will be upgraded. It will be reduced, and provision will be returned back. It is closed. Virtually, it is closed. 226 crores.
Okay. And secondly, sir, if you have the number for restructuring book, which is legacy restructuring or MSME restructuring, which is outside of this COVID 16,000 crore, there was some small amount which was there last quarter. If you have that amount, which is outside COVID.
It should be a very small account because majority of these accounts would have been covered in the COVID part. In any case, it is a very, very small amount.
Okay, understood. And then, sir, if you have the PV01 of the treasury book number for AFS book.
It is around 8.19 lakhs or so. Crore. Satish? Crore. Crore. Satish, our GM treasury is on the line.
Sir, our PV01 is 8.80 crores.
Right. Yeah, sir. Okay. That is all from my side, sir. Thank you.
Yeah, thank you, Jay. Sir, we have one question in the chat box relating to your, there was a government comment. Basically, they're again looking for consolidation. So what is your view on that?
This is a government call. As far as our bank is concerned, considering we are the best in terms of ROA, ROE, cost income ratios and all. So remaining call is to be taken by the government.
So basically, can you be an acquirer again?
Presently, there is no such move, sir. Not in our knowledge. But we are growing, sir. We are growing. Our NII growing. Our profits are growing. The 88% PCR we are having. So bank is on the growth path.
Sure, sir. Yeah, any other participant, if you have a question, you can unmute yourself and ask a question. Seems like, sir, nobody has a question anymore. Yeah, so we are done.
Thank you. You want to speak?
So you have any closing remarks to make?
Yeah, our AD Ashwani will speak.
Yeah. Yes, just as our MD was also explaining you, the way we have been growing and in all parameters, bank has done good performance, and be it ROA, REO, and our gross NPA is coming down, our net NPA is coming down, our NIM is improving, our cost of deposit is under control, our cost to income ratio is also coming down. So, and we are very conscious and mindful of the bottom line as well while giving corporate advances, and we are aiming to grow in the same fashion. Our loan growth in maybe RAM, maybe corporate, we intend to maintain the same RAM percentage going forward, and whatever future liabilities that all have been taken care during the current quarter or the earlier quarters. So, and initiatives also we have taken all digital, maybe on the lending platform or for the liability side platform. So, bank is ready for the future growth also. So, I believe the guidance given will be achieving all those guidance, and next quarter we will see a better performance in the coming quarter. Thank you.
Yeah.
Thank you. Thank you all the analysts and investors.
Yeah, thanks all participants. With that, we will close the call. Thanks a lot.
Thank you.